Let us analyze another chart of Nifty. For 1st August 2024, we see there is a small gap up opening. Okay, this becomes swing low. So from here we can count for shorts. Okay, and this is swing high. Okay, for longs we will count from here. Okay, this bar broke the low of this pin bar. Okay, so this bar becomes first entry short. Then what happens? This bar is the first bar which breaks the high of previous bar. So this red bar becomes first entry long. Okay, I hope you are understanding. Okay, so the bearish bar gets completed here as the bull bar breaks the high of the previous bar. Okay, this is the second attempt by bulls. This was the first attempt by bulls to take the price higher, and this is the second attempt. What we see here, the bulls failed to take the price higher. The next bar is a bearish bar, and the next bar to that breaks the low of the previous bar. So this becomes second entry short. This is the start of bearish leg. The first leg, bearish leg, was from here to here, and you can actually think, you can actually put it as a target that there will be equal size bearish leg. Okay, if you will see from here, almost similar length bearish leg get formed. This second entry short is quite above 21 EMA, but as you know the theory of mean reversion, there is a good chance that the price will correct towards 21 EMA. Okay, one can go short here, or one can wait for the failure of second entry long. That will be better because we are actually above 21 EMA. So this bar breaks the high of the previous bar, and this is second entry long. Okay, this is second entry long. When we are counting from here, top, this was the first entry long because this bar broke the high of the previous bar. Now this red bar broke the high of this green bar. This green bar becomes second entry long, but this second entry long fails. So this is failed second entry long. Okay, and this is a beautiful high probability setup. You can see here there is a trend line. Okay, 3 points on a line. So this is valid trend line. Let me extend it. Okay, this was the third touch, and this is a failed second entry long after second entry short form. So this is a very high probability setup. This is what I say, high probability setup at key entry point. Here the key entry point is trend line. Okay, failed second entry long in bear trend at trend line. This is high probability setup. You can go short at the bottom of this bar, or just when it breaks the low of this green bar. For being safe, you can wait for this can control the bar to form completely. But the context is quite supportive that this second entry long will fail. You could have easily entered here and made a good amount of money. This is another example of how we identify the high probability setup at key entry point. Thanks a lot.